Everyone, welcome back to Crypto Brain. Over the past 24 hours, a discussion has been building across the XRP community that has genuinely surprised many experienced investors. Almost overnight, the White House, institutional finance, and XRP have all begun appearing in the very same conversation. Now, before anyone jumps to conclusions, this isn't another social media rumor or another unrealistic price prediction. This discussion is about something far more important. It's about institutions. It's about regulation. It's about stablecoins. And perhaps most importantly, it's about the financial infrastructure that could eventually move trillions of dollars across the global economy. But wait, that isn't even the biggest development. The real question is this. While most of the market has remained completely focused on Bitcoin's short-term price action, have some of the world's largest financial institutions quietly been preparing the next phase of blockchain infrastructure behind the scenes? And if that's actually happening, are retail investors still watching candles while institutions are preparing the financial system of tomorrow? Stay with me until the very end, because the final part of this story could completely change the way you look at XRP. If the crypto market has taught us anything throughout the last decade, it's that retail investors and institutions rarely think in the same way. Retail investors chase momentum. Institutions build strategies. Retail investors look at today's price. Institutions look at tomorrow's infrastructure. That single difference has created some of the greatest opportunities in financial history. Even today, millions of investors continue asking exactly the same questions. Can Bitcoin reach another all-time high? Will XRP finally break out? When will the next bull market begin? However, behind the headlines, an entirely different conversation appears to be developing. Major financial institutions are no longer evaluating blockchain purely as a speculative investment. Instead, they're beginning to evaluate blockchain as critical financial infrastructure. And that's where the narrative changes completely. Because once banks start viewing blockchain as infrastructure rather than speculation, speed alone is no longer enough. Compliance becomes essential. Liquidity becomes essential. Operational resilience becomes essential. Scalability becomes essential. And above everything else, trust becomes essential. That is precisely why many analysts have started looking at Ripple and the XRP ecosystem through a completely different lens. But here's where things become even more interesting. The real signal isn't necessarily what most retail investors are watching today. Over the past several years, while the majority of the market remained focused on daily price movements, Ripple quietly continued expanding its enterprise ecosystem. Cross-border payment solutions, institutional liquidity, digital custody, stablecoin infrastructure, tokenization, enterprise settlement. Each piece has continued developing steadily without generating dramatic headlines. And perhaps that's exactly why today's conversation has shifted away from price alone. Instead, it's becoming increasingly focused on infrastructure. History repeatedly teaches us that infrastructure never becomes important overnight. The internet didn't transform the world in a single year. Cloud computing wasn't adopted overnight. Artificial intelligence didn't become mainstream overnight. Every revolutionary technology followed almost exactly the same pattern. First, it developed quietly. Then institutions adopted it. After that, adoption accelerated. Only then did the wider public fully appreciate its value. Many analysts now believe blockchain technology could be following exactly the same path. But another question naturally follows. If tomorrow's financial system eventually operates on blockchain infrastructure, which networks are actually being positioned to support that system? That single question explains why XRP continues appearing in institutional discussions, not because of hype, but because of utility. And that distinction may prove far more important than many investors currently realize. However, the story certainly doesn't end there. Over recent months, discussions surrounding stablecoins have accelerated dramatically. Financial institutions are paying closer attention. Governments are paying closer attention. Regulators are paying closer attention. Because stablecoins are increasingly being viewed as one possible bridge between traditional finance and blockchain-based settlement systems, And whenever stablecoin adoption expands, settlement infrastructure naturally becomes even more valuable. That is one of the reasons many XRP supporters believe the market may still be underestimating XRP's long-term infrastructure opportunity. But even that may not be the biggest signal. The largest signal could actually be regulatory evolution itself. The White House, government agencies, financial regulators, central banks, all of them are discussing digital assets far more actively than they were only a few years ago. Does that automatically guarantee success for XRP? Absolutely not. No responsible analyst can honestly make that promise. However, one fact is becoming increasingly difficult to ignore. 5 years ago, institutions questioned whether blockchain technology would survive. Today, they're discussing how it should be regulated and integrated into the financial system. That alone represents a remarkable shift. Financial markets often become far more interested once governments begin creating regulatory frameworks, instead of questioning whether an industry should exist at all. That's exactly why experienced investors today aren't simply watching price charts anymore. They're monitoring adoption, they're following regulation, they're analyzing stablecoin growth, they're watching tokenization, they're studying enterprise partnerships, because history has repeatedly demonstrated the same sequence. First, the narrative changes. Then infrastructure develops, institutions begin participating, capital gradually follows. Only afterwards does the broader market realize what has already been happening behind the scenes. Could that exact process be unfolding once again? Nobody knows with certainty, but one thing is becoming increasingly clear. Blockchain is no longer simply about cryptocurrency trading. Today, the conversation extends into cross-border payments, treasury management, tokenized assets, enterprise finance, and digital settlement infrastructure. Every one of these sectors continues moving towards greater blockchain adoption, and if that trend continues over the coming years, demand for reliable blockchain infrastructure may naturally continue growing alongside it. That's why experienced investors are beginning to ask a completely different question. Instead of asking which coin could pump next, they're asking which technology will actually power real-world finance. Perhaps that's the most important question of all, because individually, headlines involving the White House, banking, stablecoins, tokenization, liquidity, regulation, and infrastructure may not appear extraordinary. But when every piece is connected together, the picture begins to look very different. And perhaps that's exactly why conversations surrounding XRP are once again gathering significant momentum. The biggest question today is no longer whether XRP can outperform Bitcoin tomorrow. The real question is whether the financial system itself has already started changing quietly behind the scenes. Because if that answer eventually proves to be yes, then today's infrastructure developments could become tomorrow's biggest headlines. And that is exactly why institutions, traders, and experienced investors continue watching the XRP ecosystem more closely than ever before.